Everybody's talking about the real estate market cooling, but here's the kicker. While December saw a slight dip, the fourth quarter was actually one of the most active quarters in 2 decades. With interest rates dropping and demand poised to surge this spring, if you're not prepared, you may miss out again. Let's talk about things from a national perspective. In December 2024, Canadian home sales experienced a 5.8% decline from November. However, on an annual basis, sales were up 19.2%. The fourth quarter saw a 10% increase compared to the third quarter, making it one of the most active periods in the last 2 decades. This surge is largely attributed to the Bank of Canada's decision to cut borrowing costs, down 1.75% points since June, bringing the interest rate to 3.25%. Now, focusing on Ontario, the average home price in November 2024 was $868,067, reflecting a 4.7% year-over-year increase. Despite a slight monthly decline, the province's housing market remains robust, with certain regions like London and Middlesex showing resilience. Looking closer at those regional markets, which are great test markets for what's happening at a broader scale, the average home price in London reached $640,198, marking a 5.7% year-over-year increase. When we used to do our analysis on properties, we would typically gauge year-over-year market increase stabilized at like 3 to 5%. We would just be a little bit above inflation. We weren't looking for a 15% year-over-year increase in value. That is speculation. That is not a normal market. So this to me is an indicator that we have gone back to a stabilized, normal market. I do think the growth in London and the surrounding regions is indicative of the area's appeal to buyers and investors, driven by affordability from larger urban centers. We're seeing a huge amount of net migration coming down the highway because people have flexibility. They can work from home. We have great beaches. We have great trails. And I think that's one reason why you're seeing that. The other is we're becoming the London Greater region. So a lot of people like to say Justin is a London agent. Well, that's simply not true. We actually work all the way from Kitchener down to Sarnia, Lake Erie to Lake Huron. We have expansion offices in Exeter. We launched a Chatham regional market as well. So what's really interesting about our job is we get to see what's happening in major market centers, but we also see secondary and tertiary markets. And we are noticing people getting excited about living in more rural areas or migrating from larger cities to places like London. And London is like the new Kitchener. Kitchener is like the new Oakville and Mississauga. And you're noticing these places growing. So where is the puck going? But I can tell you, like Sarnia and St. Thomas are likely going to be very similar to London in the next 5 or 10 years. Markets like Lucan are growing, Alvingston, Watford. The development that's happening in the southwestern region is fascinating, which is why I like to call it the LGA. You have the GTA, Greater Toronto Area, not my market, but I have great referral partners there. This is the London Greater region, and we can all play in the sandbox, which I think is awesome. Now let's talk about trends for 2025. Looking ahead, the Canadian Real Estate Association forecasts a 6.5% increase in national home sales in 2025. The average home price expected to rise about 4.4%, which is actually less than the number I just told you. They think that number is going to land around $713,000, $375,000. I also know there's a lot of conversations talking about removing GST from new home sales. People want homes to be affordable, but land costs are outrageous. Builders have to pay an $8,000 to $10,000 a front foot in some situations. We have a ton of off-market development deals we're working on right now in those secondary and tertiary markets that are much more affordable, which is why you're seeing builders buying lots and land in those areas. But for the consumer, 30 to 40% of every new home is directly attributed to taxes and development charges. So think about that. If you could carve out 30 to 40% off that $713,000 number, all of a sudden that affordability is right in front of your face. That's a high level update. I'm going to get into the stats next week. So if you're a stats person, make sure to hit subscribe so you don't miss any future updates. Also, make sure you're on our insiders list. You'll get invites to our masterminds where you can meet us in person, collaborate with other people in our network. If you own a business, if you're an investor, if you're a farmer, if you're in commercial real estate, residential, it doesn't matter. We're one of the only brokerages that covers all asset classes. I told you about our territory. We have a Navy SEAL team. If you want to connect with us for a strategy consultation on whatever you're working on, happy to do that. And if this update was valuable to you, do not forget to subscribe to this channel for more insights. Have questions or need personalized advice, drop a comment below and I will respond to them myself. Thank you so much for joining us, and I'll see you on the next one.